Hello everybody, I'm Dean Barber, founder and CEO of Barber Financial Group. Welcome to the monthly economic update. Stay tuned as we talk about what's going on in the stock market, what's going on with the housing market, interest rates, what's going to happen next year. Well, how are we going to wind up this year? That and more exciting news. Stick around. So here we are on December 1st, 2021. Been a wild year. Let's just recap some things that went on in November. First, and most importantly, I became a grandfather for the very first time. My wife Kim and I's oldest daughter, Lindsay, and her husband, David, brought into the world Piper Lou, and she joined us coming home from the hospital on Thanksgiving Day. So that was my highlight of November. Now, also what happened was the day after Thanksgiving, the Omicron variant of COVID came out and it has roiled the markets. We've been seeing wild swings in the markets up and down. The Federal Reserve Chairman Jerome Powell came out and said that his original thoughts that inflation was transitory, he's going to remove the word transitory from his comments, meaning that inflation's probably here to stay, and meaning that he's going to start tapering the bond buying program, and that could lead to the possibility of a couple of interest rate hikes next year. We were last month thinking that we would see one rate hike next year. Now we could see two rate hikes next year, but we think both of those rate hikes will be fairly small, both about 0.25% each. With that said, let's look at the health of the market in general, where we are right now, and then I'll wrap it up for you by talking about our economic outlook for 2022. So let's take a look at the different indexes right now. And as I did last month, I want to show you in the NASDAQ 100, for an example here, 28 of those stocks are bullish, 57 of those stocks are neutral, and 15 of those stocks are bearish. And so the NASDAQ itself is still getting a very bullish rating. We then move to neutral ratings for the S&P 100, 500, Russell 1000 on down. And you see the ones that have a little green plus here, that means they're neutral plus. And then the ones that have no green are just simply neutral at this time. We are seeing more stocks in bearish territory in all of the different indices across the board. And if we look at a quick chart here of what the markets did over the course of the last month, you can see that virtually everything was either flat or down a little bit, with the exception of the NASDAQ. And so, we had and that's just these last few days here after the Omicron variant of COVID came out. We really don't know what the impact of that is going to be, but if we take a step further back, like we always do, we look at the last 3 months, there's been volatility. Look, we were down before. We look at the last 6 months, and then we look at a year-to-date chart. So we do have everything in a very positive territory year to date, but you're seeing that little fall off here. And the question becomes, is that fall off going to be different than the fall off that we saw back here in the summertime, or is this something that could turn into a bear market? I will tell you that there's a lot of things that are going on right now that we really don't know what the outcome is going to be. We still got the Build Back Better plan out there. We've got the Fed beginning to tighten a little bit, and we've got the new variant of COVID-19. Those things are going to have unknown impacts. From an economic perspective, though, we believe that we will continue to see solid growth, although it will be a slowing growth rate through 2022 and even through 2023. So we don't see a recession on the horizon, and typically you're going to require a recession in order to get a bear market. So what I would say is this, as we record this on December 1st, that I believe we'll wind up the year higher than where we are here on December 1st through most of the major indexes. And again, that's assuming that nothing comes out of left field and knocks the markets for a loop. We've seen the 10-year Treasury kind of vacillate between about 1.4% and about 1.7%. So still staying in that tight range. And I'll stick by my prediction last month that we end 2022 with the 10-year Treasury still below 2%. So even if we get a couple of rate hikes, we still think that 10-year Treasury is going to remain low. We did see some really great news on jobs being added in the month of November, and we also saw great news on the number of home sales that were done in the month of November. And so from an economic perspective, we think things are going very, very well. Unemployment is back down. We need to get the participation rate back up, meaning that the people that are not looking for jobs, if we could get those people out and get jobs, get the supply chain issues fixed up and everything, that should make a big difference in the growth of the economy through the next 2 years. And with that, I just want to take an opportunity to wish all of you a very happy holiday. I hope you get an opportunity to spend good time with your friends and your families and enjoy all of that. And I will be speaking to you again at the end of the year, actually be beginning of the new year. Thanks for joining me. If you're watching us on social media or YouTube, let's engage. Give us your comments, feedback. If you'd like to visit with us, we'll be in touch.